Good morning, ladies and gentlemen, and welcome to the CrossWord CyberSecurity PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and will publish those responses where it's appropriate to do so on the Investor Meet Company platform. Before we begin, I would just like to submit the following poll, and if you'd give that your kind attention, I'm sure the company would be most grateful. And I would now like to hand you over to the executive management team from CrossWord Cybersecurity. Tom, good morning, sir.
Good morning, and good morning, everyone. Thank you for joining us for this investor presentation, where we will present the final accounts for the year ended 31st of December 2023, and give you a view of what to expect over the coming year. So just to introduce ourselves, I'm Tom Ilube. I'm Chief Executive Officer of CrossWord. So Richard Dearlove is not on the call today, but he's our non-executive chairman currently. I'm also joined by two colleagues, Stuart Jubb, Group Managing Director, and Mary Dowd, Chief Financial Officer. Mary, as you may know if you've seen the announcements, will be departing at the end of June and will be replaced by Rose Clark, who will be our Chief Financial Officer. She's in situ at the moment and is just handing over. We've made sure we've got a good 2 months of handover to make sure that that's very smooth. The other announcement that you might have seen is that myself, Stuart, and Richard's roles will change from the beginning of August. So I will be taking over as non-executive chairman from the 1st of August. Stuart steps up to Chief Executive Officer, and Sir Richard will stay on the board as a non-executive director. So we will be able to continue to benefit from his wisdom, contacts, and advice. So that's really good news. This has long been planned. We've been working towards this for quite a while. Stuart joined in 2016, and so he and I have worked closely together over the last 8 years, very much in partnership, and that partnership will continue as I move into the chairman role and Stuart moves into the chief executive role. So if I just move on to vision, mission, and guiding principles, just to remind you, CrossWord's vision is to partner with organizations to keep them secure in the digital world. For us, the key word in that is partner. We try to build long-term relationships with our clients and just stay close to them as they navigate the digital world, and our job is to help keep them secure in that digital world. Therefore, what you see with CrossWord is a much more long-term partnership, recurring revenue, long-term relationships, rather than a series of transactional deals with customers. And our mission, the way that we do this, is by reducing cyber risks for our clients. And we do that by providing a portfolio of innovative products and services. So we are not a single product or a single service company. We have a set of products and services that we offer to our clients. Someone has said in the chat that they can't hear clearly. Can others hear clearly? Mary, Stuart, are you hearing me okay?
I'm hearing you clearly, Tom.
I'm hearing you clearly, Tom.
Hi, Tom. Just to confirm, we can hear you clearly, and we can hear you on the attendee view clearly as well.
Okay. Stephen, it may be something on your side. Sorry about that, but I can come back to you later. So products and services, a range of products and services that we offer in order to help our clients reduce cyber risk. I will give you a summary now of what we've achieved over 2023, and then I'll hand over to Stuart to go into a bit more detail. So in overview, despite 2023 in the UK economy generally being a difficult year and a year of recession at various points, CrossWord was able to grow by 15%. We grew revenue to 4.2 million, 15% growth in the year. We also improved gross margin from 24 to 27 to 29%, and we've focused heavily on cost control. We've managed to reduce admin fees by 497k year on year through 2023. So a combination there of driving revenue up 15%, pushing costs down, a particular focus last year on getting the admin fees down quite significantly. We grew annual recurring revenue by 3%, and now our recurring revenue for 2023 was 65% of our total revenue. So we were very, very pleased with that. We are essentially a recurring revenue business, and we're continuing to grow that recurring revenue. We were also able to increase the number of clients and the average revenue per client, which is important for us, and it builds on that sense of us building partnerships where we can offer a range of products and services to those clients. Our focus now is on path to profitability. We've been on that journey over the last 18 months or more. We are determined to have our first profitable month before the end of 2024, and we are focusing on reducing admin fees, 20% reduction in admin fees as a percent of revenue, excluding one-off fees. We've kept staff numbers stable, and software revenue as a percentage of our overall revenue is increasing. It's increased in 2023 from 14% in the previous year to 21%. So that further improves margins. We're also taking other cost reduction steps at the moment that Stuart might mention as we get into the detail. But the focus there, as a company, what we're about now is getting to profitability. That is our primary focus, and we want to get there by the end of the year on a month-by-month basis. We're continuing to innovate. One of the areas we're looking at and getting involved in quite significantly is what we're calling cyber AI, i.e. the impact of the new wave of AI technologies on cybersecurity. What does that mean for the types of attacks that companies might come under? What does that mean for the way in which companies can defend themselves? Are there new risks that companies are exposed to as they themselves exploit AI across their businesses? Do they open themselves up to new risks? And we're working with a group of our clients on ideas, technologies, and services to improve our clients' defense in this new world. We took some actions on the funding side, 2.62 million raised in a convertible loan note, and that was supported primarily by Gresham House and myself. I was a significant participant in that alongside Gresham. We've achieved various other things. We're achieving recognition, inclusion in the Cybertech 100, an annual list of 100 of the world's most innovative cybertech companies. We've launched new products and services, ransomware readiness assessment service that's getting good response. And we're continuing to build our ties with key partners. One key partner in particular, we've been strengthening our ties with through our software engineering services. And through the rest of 24, you'll hear some positive news, we hope, about our relationships with some of our big clients. So it's been a strong year in the face of quite a difficult economy, and we've come into 24 in good shape with a determined focus on getting to profitability. So I'll hand over to Stuart now to take it forward. Stuart.
Thanks, Tom. So I'll now give you a flavour of some of the things we've been working on so far in 2024. So we launched a new module for Trillion Harvester. You may remember that Trillion, the core product, Trillion Breach, that allows companies to look for stolen logins and passwords on the dark web. And what Harvester does is it allows companies to search for any information about their own company on the dark web without leaving a footprint. So it allows people to safely look at what threat intelligence is being talked about on the dark web. And that's a really exciting new product. We're speaking to existing clients about it and a number of new clients. So we're looking forward to seeing how that goes. We signed the partnership with TD SYNNEX. So TD SYNNEX are a major US distributor, about 23 billion revenue. Their clients resell software in some of the world's largest companies. To just get on their roster for a company our size was some undertaking. So that gives you an indication of how highly they regard our product. Trillion's the first product on their roster, and we've been spending the first few months this year just getting onboarded, meeting their sales team, getting them up to speed on how to sell Trillion, and we'll be looking for them to initially focus on UK and Europe, but we're pretty excited about that partnership. Innovation, so we launched the Cyber AI initiative late last year. There's obviously been a lot in the press around generative AI and large language models. We use various forms of AI to enhance our products, so we feel like we've got a pretty good amount of knowledge in this space. So what we want to do is help companies, use some of these tools to make themselves more secure, but also as companies start to implement generative AI and large language models, at the moment, people are trying to understand what the security implications around that are. So we launched a new practice in order to help them with that. We hired a new head of consulting, so Chris Dunning-Walton. He's worked in cybersecurity for over 16 years. Has a very good reputation, is well known in the industry, a fantastic network, and he will be key as we start to look to move up the value chain into larger clients, and I'll talk a bit more about that later. So Chris joined in April, has already made a good start. We've seen significant growth in the Caribbean, as you'll have seen with one of our press releases. We've got a partner over there. They're reselling our monitoring platform, Nightingale. So we've got a big deal with a telco over there and working with a couple of the major companies in the Caribbean. We're seeing really good growth in the Caribbean. There's the board changes that Tom mentioned, and we issued we topped up our loan notes earlier in the year, and this was supported by board members. So it's been a busy 5 months so far, and we'll start to see that continue as we head into the back end of the year. So what are we trying to do this year? So we want to grow revenue by 50% this year. We'll do that by starting to move into bigger clients, so taking on more FTSE 250 and larger clients. You tend to find when you get into those larger clients, the contracts are bigger. They can take longer to land, but once you get in, you start to find that you can sell additional work, and we can cross-sell our portfolio of products and services. As Tom mentioned, we want to be profitable and cash break even in the second half of this year. So we're going to be achieving that by both increasing the revenue, but we've also been trimming costs over the past 12 months. So we've reduced the size of the board. We did have an advisory board that we've shut down. We're consolidating some costs on things like our office costs, etc. And we're gradually trimming costs across the business to just make sure that we do hit our path to profitability in the back end of the year. We will be doing a small working capital fundraise. This is mainly just because when some of the invoices get paid, it can cause a bit of a cash flow lag. So we're doing a small working capital raise that Tom will be supporting, and we're seeing the pipeline growing across all revenue lines. So the pipeline's never been stronger. We're seeing opportunities come in from the Caribbean. We're seeing opportunities come in from our partnerships, and every single portfolio product and service that we have, the revenue is looking very strong. And given the growth through TD SYNNEX and looking to continue the growth in the Caribbean, we're looking to significantly grow our recurring revenue this year, both in terms of our managed services, but also our ARR. So I'll come into the size and shape of the current revenue in a bit later. However, we'll start to see that change, and the proportion of recurring revenue and ARR will increase significantly. So it should be a very exciting year. So I just want to take a step back and just look at the sector. It's been well publicised that cybercrime and cybersecurity has been a lot in the press a lot over the past 5 to 10 years. But I just want to make people aware of the current disparities. So cybercrime, as I said, has been well documented, but the cost to the economy of cybercrime, or cybercrime as an industry, has quadrupled in the last 10 years. And this is partly the expansion of the digital economy with people working from home, the increase in the threat landscape as more devices become connected, but also it's because cyber criminals have just become more sophisticated, and what used to be blue collar crime has now moved into the cyber world. A whole industry has developed to support criminals, where hacking tools can be bought on the dark web. Hackers even often help desk and support to customers, and you don't have to be particularly sophisticated to start going around hacking companies. You can buy a lot of the tools on the dark web. You of course have the increase in state-sponsored attacks through some of the attacks we're seeing from Russia, China, North Korea, and other areas. And also there are organisations within some of those companies who will commit cybercrime, and they're state-sponsored organisations. Cybersecurity, on the other hand, is lagging behind, and you can see that the UK cyber industry is currently 14 billion and will grow to 23 billion in 2028. This, with regulation and the increased use of AI, this is only likely to increase the threats to companies. And there's a massive shortage of talent and an increase in volume of data that companies need to monitor and analyse to protect themselves. And we think that means that there is a really good opportunity for an innovative company like us to start helping companies analyse the data, make use of the reducing talent pool. And because there's a reduced talent pool, companies will need to outsource a lot of their work to other third parties, and we think we're in a good position to take advantage of that. So although cybersecurity has been in the news a lot, you can see from the disparity between the amount of money that cyber criminals make and the size of the cybersecurity industry, we think there's a lot of growth left to go within the sector. So I'll just give you a bit of background about the company for those who maybe haven't seen this before. So we provide a portfolio of consulting, managed services and cybersecurity software. Customers mainly span mid-market companies, both in the private and the public sector in the UK. We're seeing increased success internationally, and we're starting to move into those bigger companies, those FTSE 250 companies, FTSE 100 companies, and we expect that to continue throughout the year and over the next 3 to 5 years. Our goal is to build a high margin recurring revenue business at scale, focused on ARR, and we're pursuing a portfolio approach so that we can have a broader offering to clients. Clients will often buy multiple products and services from different vendors, and we think that if we're able to offer more to those clients, we're able to cross-sell additional products and services into those clients. But also this diversifies risk. If we're seeing a lot of innovation and there's some very big companies who are investing heavily in AI, it deleverages our risk, so that if some of these big companies are turning on additional features around AI, it means that we have other products and services to fall back on should big companies like Amazon or Google invent something that proves a threat to one of our products or services. We've got 58 people across London, Poland and Singapore. We've got partnerships in Oman and the Caribbean, and we're looking at other potential global partnerships. We were founded in 2014 and we listed on AIM in 2018, and we've been quite acquisitive over the past 3 years. We've acquired 3 businesses since 2021. Trillion and Nightingale were both acquisitions, and we think, given the number of cybersecurity companies in the market, there could be opportunities for future acquisitions. And you can see that the revenue's grown steadily over the past 5 years, and we're looking to have a significant increase in revenue in 2024. Okay, so I'll talk you through our products and services. So our software products, we have Trillion and Arc. So Trillion allows companies to look for stolen credentials, so stolen logins and passwords on the dark web. What that means is it allows companies to then see, are they vulnerable to an attack, because logins and passwords are available on the dark web about them. Arc is a B2C version of Trillion. So if you're a retailer, you can use Arc to look for any of your customers' data that's been stolen on the dark web, and potentially protect yourself from being breached through a customer's stolen data. And as I mentioned, we've just launched Trillion Harvester, which allows companies to look for any intelligence about them on the dark web and do that without leaving a trace. And that's a pretty unique product. We've got Nightingale. So Nightingale is a monitoring platform. Companies plug it into their infrastructure, and it provides an early warning that they've been breached, and we're able to help them deal with any breaches. And the last product is Risiken. So Risiken is a supply chain risk management tool. This helps companies to look for the risks across their supply chains. Hackers are increasingly using supply chains to get into companies. The digital supply chain is only increasing, so a company's footprint for being attacked is increasing. And what Risiken does, it allows companies to vector in on where the vulnerabilities across their supply chain exist. We've got a consulting team, high quality consulting team made up of ex-Big Four, military and blue chip companies. We've worked with well over 125 clients now across multiple sectors, very strong in insurance and manufacturing and critical national infrastructure. We've been working with one of the largest S&P 500 insurance brokers and several FTSE 250 companies, and we offer a recurring revenue service called Virtual CISO, where companies can essentially outsource their cybersecurity team to us. And we find that that's a much better model for us and them, as it means we can essentially act as their de facto cybersecurity team. We're now focused on margin growth as the team has achieved critical mass. We also have our managed services which support our products. So these offer managed services around Nightingale, Trillion, and Risiken. And we find that this utilizes our consulting team to support the product. Again, where companies may not have their own cybersecurity team, we can provide that de facto team. And as I mentioned earlier, typically our revenue, the bulk of our revenue has been consulting, but we're starting to broaden that out and increase our managed services and software. And we'll only look to increase the split of managed services and software as we continue to grow. But as you can see, that the bulk of our revenue is recurring, and that's gone up to 65% over the last year. Next slide, please, Mary. So just a bit about our customer profile. So certainly in the earlier days, in the last couple of years, we tended to work with more SME type companies. So maybe companies who've just recently raised money or backed by private equity, and they want someone to go in and take them on a cyber maturity journey. But certainly over the last 3 or 4 years, we've moved into bigger companies, FTSE 250 companies, where companies are spending multiple millions on cybersecurity, typically multinational. And what we find is once we get into a company, it could be through a consulting engagement, we're very good at then cross-selling our products, whether it be Trillian or Nightingale. We've had a lot of success in insurance, and our managed services is particularly successful in financial services. What we're seeing in the Caribbean is we're now working across a whole range of sectors, whether it's telecoms, insurance, and also conglomerates that operate in multiple industries. And our aim over the next few years is to keep moving into those bigger clients where you tend to find the work is stickier, the projects are busier, and once you get in, you tend to be able to grow the contract size from that initial base. And our strategy over the next 3 to 5 years, so we've spent about 18 months implementing a robust sales process. So Rich Page, our head of sales, has come in, brought in a new team. We have business development managers who are cold calling every day. They're doing LinkedIn marketing and just looking to build up the number of leads that they put into the top of the funnel of the pipeline. And they have a pretty rigorous sales discipline to then develop those companies into opportunities and then obviously move them into sales. I think that's particularly successful with our products. Once we get in with the products, we're then able to cross-sell. And on the flip side, we have a range of consulting clients that once we've gone in and helped companies understand what they need to do to increase their cyber maturity, we're then able to bring in some of our products as well to cross-sell into those clients. What that also helps with is helping us with product development. So understanding what some of the new features will be in terms of product development for Risican, Trillian and Nightingale. Very focused on high margin. So we want the recurring revenue. We're very focused on growing that ARR. So the partnership in the Caribbean, a lot of that is software revenue, and the partnership with TD Synex, that a lot of that will be software revenue. So we're very focused on growing that recurring revenue base and in particular ARR. As I mentioned, we're looking to pursue bigger contracts, so looking to break into larger companies. We're on that tipping point where some big companies will spend 2, 3, 4 million pounds with companies just a little bit bigger than us, and these will be multi-year contracts. We're almost at the scale where companies will do that with us. They haven't been able to do that previously because that would have been over 50% or more of our business, so that would have been a risk to them. But we're now getting to the scale where we can take on some of those bigger contracts. And we've also seen increased success internationally. So a bit of success in Oman, but a lot of success in the Caribbean. And we're looking at how can we take advantage of other additional international opportunities. And that doesn't mean necessarily opening an office in different geographies. If the business is there to support that, we will consider doing it. But we've got a good model in the Caribbean with a partner, and we want to replicate that model in other English-speaking countries. And we're in a number of conversations with other geographies to do that. One thing I'll just mention that's not up there is we are very focused on innovation. So I mentioned the work we're doing in AI at the moment. We ran a series of workshops at the Alan Turing Institute and Oxford University last year to look at the cybersecurity implications around AI. So we're already sort of well ahead in terms of our thinking in this area. And we want to to help companies understand how they manage the threat around AI. If companies are giving large language models their data, how do they know that that data is going to be protected? But also, we want to be continuing to innovate our products, because we know that this isn't an industry that you can stand still in. So we'll be very focused on innovation. So the second half of the year will be looking to be EBITDA and cash break even, and I think it's going to be a very exciting second half of the year. Back to you, Tom.
Thanks, Stuart. I'll pick it up from here. So just to go through some of our financial statements. So on the screen, we have the consolidated statement of comprehensive income, starting with our revenue, 4.2 million, which is 15% increase on prior year. Within that, the product revenue grew by 77%, and the product revenue now constitutes 21% of total revenue, and that's an increase from 14% in the prior year. Our ARR grew by 3% to 2.5 million, and overall our recurring revenue was 65% of total revenue. Gross margin was 29%, so this is an increase of 5 percentage points from 24% in FY22. So strong growth on gross margin as well, and that was driven by the increase in the product revenue proportionally, as the product revenue is higher margin, but also good strides were made in margin improvement within our consulting services. Admin costs were reduced by 10% in the year, and as a percentage of revenue, they've reduced by 27%. So good, strong cost control there. The loss before tax was 4.1 million versus 4.6 million in prior years. And our balance sheet, the main points to note were non-current asset movement included reduction in valuation of CyberSecurity shares that we hold, and that was a reduction of about 400k. Cash at the end of the year was just over 700k, and we have an increase in long-term liabilities, and that reflects the increase in convertible loan notes issued during the year. So back to you, Tom. Tom, you're muted.
Great. I'll just summarise and then we'll sort of get into the questions, because there's some really good questions coming through on the Q&A. So where we are as Crossword is we are pushing hard to get to break even. We want to grow as a profitable company. In the past, we've raised money to build up the revenue, to build up the team. That's been the focus of the company, to build the products. We shifted focus about a year, 18 months ago, to say, okay, we've now got the clients, we've got a certain level of critical mass. What we now need to do is to keep the costs flat. If anything, push the costs down, keep building up the revenue, get to profitability, get to break even on a month-by-month basis by the end of 24, and then continue to grow as a profitable company. So that is the absolute focus of us as an executive team. We will be growing, we will be going into 25 as a profitable, very well-run cybersecurity company with a wide range of clients, not dependent on one or two major clients, but with a wide spread of clients, and we will continue to grow profitably from there. We will continue with our strategy of having a portfolio of products and services rather than being totally reliant on one product or one service. We will be very focused on making sure that each of those products and services start to wash their face, they start to become profitable in their own right, so that we are overall profitable. We will continue to innovate as a company, hence our push into the impact of AI and generative AI and large language models on the world of cybersecurity. And that is the company that you will see going forwards. We will do a lot of our work in the UK, but we will also, as Stuart said, be exploring overseas, Caribbean, where we're making good progress, some areas of the Gulf region where we have feet on the ground and are doing some various projects out there, and we will continue to be partner-led as we go into some of these areas rather than investing heavily ourselves. We're going through a transition of the leadership, as you've seen. So I'm moving into the chair role. I will be very visible and active in that role. Stuart is moving into the chief exec role. We've been working towards this for quite some time. So the partnership of Stuart and I driving the business forward will continue, and you'll see me continuing to be actively involved and supportive of the company, and Stuart really gripping the reins and driving things forwards. So that's where we are as a company. We are very comfortable with forecast for the year. We think we've got a good year ahead. We've got a strong pipeline, and we're looking forward to seeing CROSSWORD grow, hit its numbers for the year, going to 25 as a profitable company. So thank you very much for continuing to support us as shareholders. It's really been important and continues to be important to have your support as we drive the company forwards. So I'll stop there and hand back so that we can get into the Q&A session.
Perfect. Tom, Mary, Stuart, thank you very much indeed for your presentation this morning. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the right-hand corner of your screen. But just while the company take a few moments to review those questions that were submitted already, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Tom, Mary, Stuart, as you can see there in the Q&A tab, we have received a number of questions throughout your presentation this morning. And thank you to all of those on the call for taking the time to submit their questions. But guys, at this point, if I may just hand back to you just to read out those questions and give your responses where it's appropriate to do so, and then I'll pick up from you at the end. Thank you.
Great, thanks very much. So I'll lead on reading out the questions and either answer them or hand to you, Stuart or Mary, as appropriate. So the first question is, do we have sufficient funding in place to take advantage of the significant opportunities ahead? So as Stuart mentioned, we will do a smallish working capital fundraise that just takes us on the journey to break even later this year. And that is working capital rather than sort of investment capital. As I've explained, we are pushing for break even now. So we want to grow as a profitable company. And once we get to that point of being a profitable company, we will then have the cash that we're generating from the business to be able to reinvest in the business in order to take advantage of the opportunities ahead of us. And we're comfortable that that will give us that flywheel effect of money coming in, profitable operation of the business, cash coming in that allows us to take advantage of the opportunities. Now, clearly, if there was something very different, if there was a significant acquisition or a whole new area that we felt was an opportunity that opened up, then we would look at that and see whether it made sense to try and fund it in some way. But that's not what we're planning at the moment. What we're planning at the moment is continue to drive, get the business to break even, make sure that we've then got enough cash coming in order to take advantage of the growth opportunities that are ahead of us. And we think we can grow at a healthy rate via that route. So that's what I'd say to that question. The question, there are a lot of companies in this space. How do you stand out in the market? Stuart, maybe you want to comment on that, and maybe in the context of opportunities that we've been in, who we find ourselves competing against, and why we get chosen, really.
Yeah. It's a fair point. I think there's about 1,800 cyber companies in the UK. Some of those will be very small, and then I think there are 180 our size or bigger. So you're absolutely right. There's a huge amount of competition. So we stand out because we truly are innovators. So when we're doing things like cyber AI, we tend to find that we're the first people who are talking about it. We've been looking at AI for a number of years, and the kernel of the company, where we were born from university research, means that we can see what's going on in terms of cybersecurity innovation. And I don't believe there's many companies who are doing that. We tend to find that we compete against a lot of different companies. So we're tending to compete against the big four, the likes of NCC and some of the bigger companies now. And we can offer that portfolio of different things. So companies who they can maybe can only get consulting from the big four, they can get a portfolio from us. So as we get into bigger companies, we're competing against those bigger companies. I think we're more attractive from a price point of view as well. And it's a very trust-based market. So as we're in sectors, we tend to get recommended by companies to their peers in those sectors. So there's a number of different areas, but it's certainly a very consolidated market at the moment.
I think just to add to that, as I said right at the beginning, we build relationships. And we establish long-term trusted relationships with our clients. So if you can do that and you can become a trusted supplier to a client, they know that you're going to be able to deliver good quality work, good quality products. You tend to continue to work with those clients and build out those relationships. And this is a referral market as well. The nature of the cybersecurity market is that people aren't just going on price, they're not just going on the latest whizzy feature. They want to know that you work with customers like them in their industry, and they reference each other a lot. So the fact that we are looking at growing by 50% or so this year tells you that we're doing something right in the eyes of our customers, despite it being quite a busy marketplace. The next question is about traction for our cyber AI practice. I mean, at this stage, we're not sort of releasing figures related to cyber AI and so forth, but what we're finding is that almost every major company is exploring what AI means to their business, what generative AI, what large language models means to their business. And as they introduce those models, as they introduce those large language models, as they introduce these generative AI techniques, also every company is beginning to understand that it has cybersecurity implications. So we're finding that it is very easy for us to get into conversations with our large clients and with new clients as well about what we're doing in this area. This is an area that opens up new conversations fairly easily, and we're finding that budgets are shifting towards this area because companies are starting to spend decent amounts of money on AI in general, and therefore they're starting to think about what does that mean from a cybersecurity point of view. It's a very complex area when you think of it from a technology point of view. People sort of think about a large company maybe having one large language model, but actually they could have 10, they could have 50 different language models across their business. What does that mean from a security point of view? All those things need to be thought through. So it'll be an interesting area, and we'll continue to be heavily involved in it. The other question that follows is about revenue from TD SYNNEX. And again, we haven't said specifically about that, but Stuart, you just want to talk about how that TD SYNNEX relationship is developing.
Yeah, so as Tom said, we can't release figures. However, we think that will be a significant relationship over time, and we think we will see meaningful revenue this year. The conversation started probably 9 months ago. So typically these conversations can take a long time to come to fruition. We signed the partnership earlier this year, and we've now spent the last 3 or 4 months just getting onboarded with TD SYNNEX. So making their sales team aware that who we are, how to sell the product, details about the product. I think the sales team have probably had up to 30 or 40 meetings with TD SYNNEX. So that just gives you an indication of the amount of work that it takes. Myself, Tom, and some of the other execs are meeting senior TD Synnex people. We've started to see some initial orders come through, and we think that that volume will only increase this year. So in summary, it will be a significant relationship. We think there will be meaningful revenue this year. As with all these things, it's difficult to tell on the timing, but we wouldn't have signed the partnership unless we thought it was going to be significant.
Okay, great. Mary, there's probably a couple for you here, although again, we don't tend to go down to this level of detail, but you might sort of have a comment on what they're sort of trying to get at here. What is the average order value for each product stream? Does this value become recurring? There may be something you can say about the shift to recurring, and what could a FTSE 250 supply chain customer annual recurring revenue grow to in the following years? So just a sort of sense of the scale maybe of some of these sorts of opportunities.
Yeah, I think it's an interesting question, and because we have a diversified portfolio, it's hard to give a straightforward answer because each product and service is different. And also Stuart has mentioned the fact that we're looking at larger clients and cross-selling into our larger clients. And what we're seeing is that our new sales are at a higher value, and we're trying to convert those cross-sell sales in at a higher value as well. We also have mentioned the Caribbean, and they are to larger clients, so that's driving up our average sale value. And some of those contracts that we're seeing are almost 3-year deals. So we're seeing kind of the traction going out for a longer period of time as well. So that ARR has visibility for years into the future. Our consulting plan is often to maybe sometimes get in on a pen test or a cyber maturity assessment, and then we will grow and develop our relationship with the client until we have achieved our aim, which is to have our virtual CISO contract, which is a recurring revenue ARR contract. So I think that probably gives a sense that it's growing because we're growing with bigger clients, we're converting our revenue into recurring revenue, but it does vary significantly across the product bases.
Great, thanks, Mary. The next question is about profitability and essentially profitability through cost cutting and headcount reduction not being sort of a long-term strategy. That is absolutely right. What we are doing now is getting ourselves to that profitability point, i.e. we know what revenue we're going to do this year. We know where the cost base needs to get to in order to get to the point where those two lines cross and our revenue line passes our cost line. And therefore, we know what costs we need to cut in order to bring it down to the level where those two lines will cross. We have been pushing towards this in the past, but I would say that back end of last year and this year, it has been much, much more our deliberate strategy, i.e. less focus in our conversations on how do we grow the top line. Let the top line grow as it's growing, we'll keep pushing it, but just the continuous conversation in the management meetings, in the executive meetings, at the board meeting, tracking, are we on track to get to that profitability point by the end of 2023, and what do we need to do to the costs to get there? Once we get to that point, we then want to grow as a profitable company. So we don't then expect to still be cutting costs in order to maintain that profitability. We'll continue to grow revenue, but we'll grow revenue profitably. And in fact, at that point, we'll be able to grow costs again because we'll do it from a profitable position. So that's the strategy. That's where we'll get to. And by the end of the year, that's where we expect to be. So really at this point, all we can say, and we are saying, is when we get to the end of the year, we expect to be telling you the company has had its first profitable month and is projecting being profitable going forwards. And that's what we're focused on. The question then, the additional question then is about whether we can genuinely win the bigger contracts from clients essentially given our size, and whether there would be any concern amongst bigger clients about our market cap. Now, I would say from our experience, and Stuart, I might ask you to comment on this as well, companies that we deal with are less fussed about our market cap. In fact, I don't think, Mary, you can correct me if I'm wrong, I don't think it's particularly ever come up. What they are interested in, if they have any concerns about placing larger contracts with us, they don't want to be too big a proportion of our revenue. So, for example, last year revenue was just over 4 million. We're not going to win a £2 or £3 million contract with a client when we're at 4 million revenue, because they're going to look at it and say, we don't want to be, you know, if you add that to the 4 million, we don't want to be 30% of your revenue. Whereas as our revenue starts to get up to 6 million, 7 million and beyond, we will start to win. And in fact, we are starting to win £500,000 to £1 million type projects. And that will continue to work in that direction. So I think, and Stuart, you can comment on this, I think where we do get into those conversations, the questions that come up are, what proportion of your revenue are we going to be if we place this £500,000 or £1 million contract with you, rather than why is your market cap X and what do we think about that? Would that be fair from the conversations you've been in, Stuart?
Yeah, no, that's absolutely right, Tom. It is very much contract value as a percentage of turnover. And we're finding, as I said in my presentation, and in fact said in an interview last week, that we're moving up that value chain of client size. So we've worked with mid-cap SMEs before. We made a concerted effort to get into FTSE 250 and similar size companies. And we're growing some of those contracts. So the contracts in the Caribbean are growing. Some of those are £500,000, approaching £1 million contracts. And as our revenue grows and we're having more of those conversations, I think we'll be getting into more of those £2-3 million contracts, because our turnover will allow us to start bidding for them. But it does take a while to turn those conversations into revenue. And we've been having those conversations for a couple of years now.
And Mary, when we've been sort of onboarded with major new clients, have there been conversations about market cap, or do they tend to sort of look at us through other lenses?
No, there's never been a conversation about market cap. As Stuart said, it's about revenue, and then, you know, certain accreditations, but never about market cap. Yeah,
okay. And then the final question is sort of a generic question rather than a crossword question as such. What's the industry norm for market cap as a percentage of turnover? We get copied on a report that I think comes from Silver Peak. Is it, Mary?
Yeah.
Yeah. So there's a sort of corporate finance house called Silver Peak, very good firm that does a lot of analysis in this area, and they send out a sort of regular report. And from what I can see in the cybersecurity, the sort of UK and Europe cybersecurity area, the market cap metrics are about 2.4 times revenue on average. Now it varies a lot whether you're profitable or not, but that's pretty much the average.
Tom, Mary, Stuart, if I may just jump back in there, and thank you very much indeed for being so generous of your time then, addressing all of those questions that came in from investors this morning. And of course, if there are any further questions that do come through, we'll make these available to you immediately after the presentation has ended, just for you to review, to then add any additional responses, of course, where it's appropriate to do so, and we'll publish all those responses out on the platform. But Tom, perhaps before really just looking to redirect those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments to wrap up with, that would be great.
Absolutely. So as I said earlier, we've had a good year in 23 in quite a tough market. We've come into 24 in good shape. We are absolutely focused on CROSSWORD is getting to break even. That's what we're going to do, and that's where we'll end the year. And then we'll go into 25 in really good shape as a profitable growing cybersecurity company. Questions around when is CROSSWORD going to get to break even, etc., will be behind us, because we would have got there. We will continue to grow as a profitable company. We will be the sort of size where we start to win some of those bigger opportunities, and we'll drive forward with our portfolio of clients and services from there. So thank you very much for supporting us. Thanks for the great set of questions, really interesting, and we look forward to staying in touch.
Tom, that's great. And thank you once again for updating investors this morning. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can really better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of CROSSWORD CYBERSECURITY PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good morning to you all.